Hello, gentlemen, and welcome to another Palaview market research video. We are Palaview 2025. Everything is about to change. This small club of guys is about to become a substantial community of market movers. This is a big year for Palaview and what we're doing here. 2024 was a lot of like learning what we want to do, why we're doing it, but now we know exactly what we're doing. We know why we're doing it. The amount of clarity here at Palaview is substantial. This is what people fight their whole lives to achieve. And we are going to do big things this year. I think you guys already knew that. I think you guys are kind of in touch with what's going on here. And I think the people of America and the world are just ready for more Palaview, don't you think? Now, today we're going to be discussing a paper or a blog post email that I received from Pantera Capital. It's titled Escape Velocity. Now, if you don't know what Pantera Capital is, I'll tell you. It is the first Bitcoin hedge fund, okay? Pantera, the origins of the name, it actually means panther. And I believe it's because, and I could be making this up, but Mike Novogratz and Dan Moorhead is here. Dan and Mike Novogratz, I believe they did like an ayahuasca ceremony in the early 2010s. And during that ceremony, they both like kind of had an aha moment with Bitcoin. Could be totally making this up. I mean, actually, no, I'm not. I know that this is true for Novogratz, but whatever. I'm pretty sure that both of them had this like ayahuasca like experience, and they both saw panthers, and that's why like you'll see like Mike Novogratz, he's got like a panther tattoo, and Dan Moorhead named his fund after a panther. And if you don't know, side note, jaguars and panthers in the Amazon, they chew on the same root that ayahuasca is brewed with. That is a leading theory as to why so many people who go on ayahuasca, they see panthers. It's because the panther is achieving that same vibrational state and is entering that same dimension with you, but they don't have to brew it and all that. They can just chew on the root themselves. You can look up yourself what it looks like when a jaguar or a panther eats an ayahuasca root. They literally visibly, like there's videos of this, they are visibly rolling on the ground in the Amazon, tripping their balls off, okay? So that's a little bit of insanely irrelevant background to why this fund is called Pantera. Probably, I don't think I'm actually pretty sure this is correct, but I can maybe ask Dan later because Dan's my neighbor. Dan lives less than 5 minutes from me here in Puerto Rico. I know a lot of people who work for him, used to work for him, people who wanted to work for him and then failed. One of my mentors, his ex-girlfriend is his head of legal now. So I know more about Dan than that should make him comfortable. We're not going to talk about any of that. We're going to talk about this letter he wrote on December 17th, 2024 with a bunch of his, look at these nerdy partners he has. No, I'm just kidding. So read this. Escape Velocity, Pantera Bitcoin Fund, the first Bitcoin fund in the history of Earth. This guy in 2013, he started to raise money to buy Bitcoin on a 2 and 20 structure. Okay, so think about that. He bought Bitcoin with other people's money, and he had charged a 2% management fee and a 20% carry to do so. Do you understand what I'm saying? Crazy shit. Now, in this interview where he was on November 26, 2024, his fund hit a 1000x over that course of 11 years. Now, that's crazy, right? So this is a screenshot from when they were on CNBC. It's an amazing, amazing accomplishment. But the thing is with Dan has a lot of other funds. Dan has been in the space for a long, long time. I know people who raise money for funds. I know people who raise money for funds that, who reject raising funds from Dan because Dan's funds tend to do super well or super not well, right? So he's in a high risk, high reward category. This is interesting because High risk, high reward categories. If you are from a Goldman background and all this, you get put in a box, right? So your upper echelon of total management. How do I put this? If you are in the fund management world, you are either fighting for carry or you're fighting for fees. What do I mean? So there are some guys who have very boring, very, very boring fund structures where they're just buying bonds and a weird bucket of ETFs and indexes, right? Maybe some debt, shit like that. Okay. Those types of guys will try to raise billions and billions of dollars because they're really more interested in capitalizing on that management fee. Because if you get 2% on $5 billion, you're making $30 million a year, right? I know people in Puerto Rico who are playing that game. Dan plays a very different game. Dan's playing a carry game. Dan wants to get as much of that carry, that 20% of other people's money's profits, right? And he's not terribly worried about getting the management fee. I'm speaking for him a lot in this video, so sorry. But I imagine because his funds will not get to the same kind of scale and size. So as a result of that, a lot of these altcoin funds and stuff that he has will probably remain in the hundreds of millions but that's probably fine too, because he'll make an obscene amount of money on that 20% carry when those funds are successful. So that's just a little side note. You obviously want to optimize for both where it makes sense. You want to balance the two, but the thing is with the hedge funds and all this shit is like, you don't really actually want to be known as the guy in New York, in Manhattan, as the guy who's like getting these 1000Xs and things like that. As crazy as that may sound to you, you want to be the guy who's generated somewhere between like a 25% and maybe a 65, 68% IRR over the course of 20 plus years. If you can be in that range, you can raise infinite money. Okay? Because that's responsible. That's responsible investing. You'd be surprised how few investors want to see that 180%, that 400% IRR over the course of 1 to 2 years, right? They're actually not that interested in that because they are adults. Does that make sense? So let's actually start walking through this letter, okay? Sorry. So let's talk about the percentage point differences in vote by gender and age, and this is something that Pantera's letter is starting with, okay? Because this is not trivial data. Men and women are both moving rightwards in the political spectrum. Men especially. Men under 30 swung 29 percentage points to the right. Crazy. They say that's wild. It is wild. The incoming 119th Congress represents 274 pro-crypto people, 122 anti-crypto people, a Senate that comprises 20 pro-crypto and 12 anti-crypto. So crypto legislation and healthy crypto legislation is coming. So these things are awesome. And what this will allow us to do is to participate in the real world asset space, software, governance tokens related to real world assets. That is what is going to be unlocking soon. Okay? Now, they show off a few of these highlights. So in January, the Bitcoin ETF launched. Meme coin trading on Solana takes off, where it was, we were hitting, I remember I saw one day on the deck screener that Solana meme coins had a total 24-hour trading volume of $24 billion, guys. That's obscene. Ethereum upgrade, sell off, blah, 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 whatever. Red sweep is what we just kind of talked about over here, right? So now let's talk about phase 2. So they're talking about how we're entering phase 2, which is what? Altcoin season. That's what you guys and I really like. So let's read what they've written here. We've observed that bull cycles have 2 pronounced phases. Phase 1 is the early stage of the rally when Bitcoin has tended to outperform the rest of the market. So you can see that this is a total crypto. Yeah, so you can see that in the white line. And then Phase two is the later stage when a longer tail tokens or altcoins have tended to perform. So they're stating here that as of 12/15/2024, we are entering, potentially altcoin season, right? At least it typically times up that way. Or maybe they're saying that we've already entered it. It actually appears that that is what they're saying. Okay, so something worth noting is that the magnitude of altcoin performance has been so large in phase two that altcoins have outperformed Bitcoin across the full length of the two previous cycles. The share of total market capitalization growth was 65% and 55% for non-Bitcoin tokens. We are now seeing early signs that we are in the second phase of that upswing, okay, which has been catalyzed by the US election, right? So which I think everyone is on board with this, right? This is where this video gets very interesting. And if you've been tracking this channel for a while, you will know that this is a belief that I massively, massively share. And it was nice to hear another very professional firm, this guy Ryan and others, agree with a lot of the kinds of crazy things I've been saying, actually, like this. Stablecoins are $1 trillion opportunity. That is not hyperbole. This is true. Pantera gets it. More and more people are going to get it. And I'm going to keep making videos about why this is the case. But like I keep saying, when I tell you that, hey, central bank digital currencies are here and it's called USDC and it's owned by a company called Circle, and Circle will likely go public soon. And that company will likely be one of the, if not the for sure, most profitable company in all of crypto relatively soon, if it already isn't. Okay? What that market capitalization is for Circle when it goes public, I wouldn't be surprised if it was. I know that I believe their last private round was raised at 9 billion, and I think that they quietly had a smaller round that went a little bit below that, and then they had a bunch of IPO rumors that just never manifested. So I wouldn't be surprised if this thing IPO'd between 10 and $20 billion market cap. And if it was above 20, that would be crazy. That means that BlackRock, Fidelity, the guys who participated in those later rounds at the $9, $8, $7 billion valuation for Circle are going to make a pretty penny the day they IPO it. Okay? Now, stablecoins are growing as a percentage of on-chain transaction activity. This is why stablecoins, guys, this is one of the most interesting things about the last 5-10 years of crypto is, especially last 5, people say that oh, well, when Venezuela's currency collapses, everyone's going to go buy Bitcoin. Not true. They buy US dollar stablecoins. Okay. And they buy some Bitcoin, but people buy fucking stablecoins. People in Venezuela were also buying stablecoins on Tron, right? It wasn't even, they're your typical stablecoins. Okay. Yeah. So as a percentage of the total on-chain transaction activity, we can see that stablecoins is continuing to eat more and more and more of the pie. And that makes perfect sense. And again, it's going to become exponentially so. Why is it going to become exponentially so? Because as more securities, real-world assets, stocks, land, bonds, everything is tokenized, you need liquidity pools, and all of those liquidity pools are going to be enormous, and they're all 50% stablecoins. So stablecoins is going to destroy the block space of, they're just going to continue to eat into this. You see how this is Ethereum, especially Bitcoin too, but especially for this metric of on-chain transaction activity. Okay. So again, more ways to visualize this trend of stablecoins going up, demand for stablecoins going up, the use of stablecoins going up, the supplies of stablecoins going up. All right. And so they talk about how stablecoins actually improve efficiency, right? So when I'm a business, I've got a business, and then I want to send money across borders. I need to get to my bank. I need to get to this intermediary bank. I need to get to the beneficiary's bank, right? So this is, say I'm in Puerto Rico and I want to send money to you in Ireland because I love this new design of a website you gave me for Palaview, whatever, and I need to now wire you money. That's how it happens, right? And you have to go to, I have to go to my bank. They have to go to an intermediary bank. And that intermediary bank goes to the beneficiary's bank, the Ireland bank, and then the Irish business gets it, right? But obviously, as you guys know, stablecoins is wildly better in every way. Every way, hence this thing here. Stablecoins are better, faster, cheaper than everything else. Okay? Even though we do have a digital dollar technically that this is interacting with, we're increasing the digitization characteristics of the dollar with stablecoins, something like that. Now, that is today's video, guys. Did you learn something about Dan, about Pantera, about how the entire blockchain industry is reaching escape velocity? What does escape velocity means? It means that we've reached a point of no return. The amount of capital that is the amount of institutional capital that is now allocated over the next decade to Bitcoin, to all these different assets, is now super overwhelming. So there's no going back. The stablecoin market is going to continue to rip, especially as on the backside of clarity as to how someone like me can deploy real world asset related decentralized software and governance tokens. Do you guys get what I'm saying? Do you know? I don't think you understand. If you just can repeat that to yourself over and over again, a decentralized platform that hosts RWA assets that is governed by a governance token. Okay? If you can have all three of those characteristics and you can hit a niche like, I don't know, mortgages, car loans, anything, you can monopolize an entire financial market and in a decentralized way, offering competitive rates. I'm not going to get too deep into this. I love you guys. I'm so happy I'm back making these videos. Really, really great. It's been, honestly, I've been really good lately. I hosted like probably 20, 30, almost 30 people in Puerto Rico in the month of December. So it was a little bit crazy, probably a little bit too much, but we're back and we're going to keep making the sauce. He's a sauce maker. Making the sauce. Later, guys. Later.